Russell, you talk with HOAs and condo boards all the time. When someone reaches out to us, what are they usually dealing with? What's going on with their reports?
They are, first and foremost, they are probably not getting reports. Sometimes we've seen people that haven't gotten reports for 3 or 6 months, which is a problem because they're not able to operate their community. So, not timely reporting. Second thing is that they constantly have inaccuracies in the reports. So the reports that they're getting, a board member spots something where they see that there's information that's clearly wrong. And then the board member has to do research in order to figure out what is wrong. And they might not get a response from the company that's providing the reports in a timely way. So this takes a lot of time chasing down that information and it's exhausting. So those are two things. The third thing is if it's a volunteer who's doing the financials, it could be a board treasurer for a 100% self-managed community, and they are spending an inordinate amount of their free time collecting money, paying bills, and doing financial reports. So they are looking for a succession plan for somebody to turn that over to because they're burnt out. So those are three things that come to mind when people are looking to talk with us.
Yeah. One of the things that comes up pretty constantly in our conversations with clients and prospects is that boards feel completely lost even when their monthly financials arrive. Let's talk about that. Is it something you're seeing a lot? Why do you think that happens so
Sure,
often? Is it the reports
sure.
themselves? Is it something else? Is it a board problem?
Sure. I would say the board is handed us or emailed a stack of reports that have all of these numbers all over the place. It just looks like that used to be a white sheet of paper, but now there's black ink all over it. And it doesn't really make sense to them because most boards are volunteers and they don't have a lot of experience looking at financial reports. So it's like if I was trying to pick up a book in a different language and try and read it, I'd have a hard time doing that. So for a lot of people, reading the financial report is like looking at something in a different language. So
Mhm.
that's why we provide resources and education to broader, board member and property manager marketplace. But then also for customers of ours, we provide a client manager who helps translate that for them. So the reports are like a dashboard on a car. So in a car, some of the things to keep an eye on are whether your temperature of your engine is too high, because that may mean that your engine will seize up. You got enough oil pressure, or else you can also have that problem. You've got enough gas in the tank to get where you're going, and you know what the speed limit is, or the speed that you're going, so you stay within the speed limit. So the financial reports are like that dashboard for your community where you are driving your community to wherever it is that you want to go. And you can't do that unless you have this snapshot, which should be monthly, in order to see what the numbers are telling you. Do you have high delinquencies, which means that you're not going to have enough income to pay your bills? Do you have a number of bills that are adding up that you haven't paid for that are stacking up because you've got this cash problem? Are you facing something that was over budget and then you've got to figure out how you're going to pay for it because you're on a fixed income as a community? So that's why the financial reports are so important, making sure that the reports are accurate and clear and on time.
Okay, if you were sitting across from the board treasurer or any board member right now and they have 5 minutes to review their monthly financials, what do they look at first?
Absolutely. So we've got a download for this very topic because board members are busy people, and if you've got your own life outside of being a board member. And if you only have a couple of minutes before the meeting, because life was busy this before your board meeting, there's a few reports to look at first. And number one is going to be your balance sheet. So on there, that's a snapshot of the association's financial picture at a given time. And you're going to look for how much money do we have in the operating account. You're also going to look and see what I said before, where you can view the accounts payable or the bills that have stacked up and have not been paid. So you can say, okay, I've got this much cash in the bank, this many bills that haven't been paid yet that I've got to deal with. And then also you're going to look at how much money do we have saved versus, what types of capital improvements or replacement projects we have coming down the road, whether that's from a reserve report or from just estimates that you have. So has that number of has that dollar amount in the operating account and the reserve accounts gone up over the last 30 days from you last looked at the financial reports, and has the payables or the bills that are outstanding, do those have to go down? So that's the first one, the balance sheet. The second one is your age delinquency. So you're going to look and see how many how much money is owed to the association by homeowners that are late. And usually this is going to have buckets, 30 days late, 60 days late, 90 days late. You want to get you're going to take action usually in the 30 days and then also at the 60 days late. So you are going to look at this age delinquency report as a board, and that's going to inform you how you're going to follow through on your collection policy that you should have, which tells you, okay, when an owner is delinquent 30 days, this is what happens. When they're delinquent 60 days, this is what happens. So then you know what course of action you have to take based on your collection policy. And the third thing is your income and expense statement. So you're going to take a look at your income and you're going to look at the expenses, and it should be somewhat positive at the bottom, what's left over. So you have money coming in versus money going out, just like a home budget. And then you want to have a little bit of money left over at the bottom. That money should probably be going to, either be saved for a big insurance expense in a couple of months or go towards, like reserves or something like that. But that's sort of the top three you're going to want to take a look at.
Is there a report that most boards receive every month, but they never really look at, right? So we should always be looking at the balance sheet and the income statement, our delinquency report. But is there one report in a standard report package that you believe to be underused and undervalued that boards should be looking at?
Well, I would say that there are well, I'll start with one. All right, but the first one is, and this might not be in your existing financial report package, but this is something that I started off in this industry 25 years ago as a community manager. The number one report to run the community is called the comparative income and expense report. So it's that income and expense report that I mentioned earlier, but then it also has for the month and then for year to date. And it's also got your budget for the month, and it's got your budget year to date, and then it's got a variance next to that. So if we had less income, than we had anticipated, there'll be a variance. And then it have had bigger expenses on each of your line item expenses, whether that's snow removal or fence, maintenance or landscaping or whatever it is. Those line items are going to it is going to jump out where you see the variance. That's where you're going to put your attention to. So if you're overspending, water is one that often comes up. If you're overspending in a certain area, that's where you dig in and find out more about why that is. And then also for the year to date, you're going to see that too. So it's not just the picture of that one month, but if you are, at the middle of the year and you're really over budget on some of your line items, what do you have to do to make adjustments? So that is the first one, is the comparative income expense report. So it's got your income and expenses next to your budget for that period. And that is a critical report to operate your community, because you won't need to be on budget, or else you're going to have to come up with the shortfall somehow. And most people don't want to be hit with a special assessment for that.
All right, best practices. Let's talk about those for a few moments. How often should the board actually be sitting down and reviewing their financials together as a group? Is there a rhythm, a routine that you see in well-run communities? Something they do every month, something they do every quarter? What is the best practice there?
Sure. So I often, tell people that a best practice is to get financial reports on a monthly basis. And I've been approached by communities that say, can you only give us reports on a quarterly basis, and could we save some money? And I said, no, we can't do that, because it's not a best practice in the industry. You need the financial information you're getting on a monthly basis is already 30 days old. And you need to be looking at that on a monthly basis as a board and a manager to see whether you're on target for your budgeting. And, if you're waiting to the end of the quarter, maybe the expense doesn't happen in the first quarter, so you don't pick it up, but then it happens like in the second or third quarter. And by the end of the year, you're already way over budget. So you need to stay on top of your financial reporting. And it's not just the role of the treasurer, although you're going to rely on the treasurer to bring that up in a board meeting, but everybody on the board should be curious as to how we're doing with collections, how we're doing with, are we on budget? Because somebody might be in charge, they might be on the board, but not in charge of the money, but they might be in charge of maintenance. And maybe their maintenance budget is really over budget, and they're going to have a problem, and so they either got to slow it down or come up with the money from some other place by saving money somewhere, or they may have to do a special assessment, and the next year they may have to increase their budget. So it's just the timeliness of the information helps the community leadership react to operating their community, and be able to stay on target, and that target is to stay on budget for the year, so that they don't have to go to their homeowners and ask them for a special assessment, because nobody likes that.
And what are some important questions, or the most important questions they should be asking when they're reviewing these monthly reports? Not just looking at the numbers, but really diving in and interrogating the information that the reports tell them. Is there a question that maybe they never think to ask, but they should be asking?
I would say, again, going back to the comparative income and expense report, if you take a look and see why it is that you're over budget in a certain area, and then you may have to dive in and look at the invoices that are the backup behind that number to see, okay, if we contracted for service and we're getting overbilled, why is that? Or if our water bill is supposed to be, 3,000 for the year, but it's 7,000, why is that? Maybe it was, and this often happens, had somebody bring in a big truck to do some tree trimming or something. It ran over a water pipe. Nobody saw the water leak, but there's a break in the pipe, and so the water's just like pouring out, and they're getting charged for it. So those types of things, when you look at the comparative income expense statement and you've got your budget based on historical data that you've come up with as a board and what projects you're going to be working on, and then you see that you're way over budget on something, that is the red flag to take a look and see, okay, what do we have to do operationally to get back on budget, or what is going on that is causing this, so we can get ahead of it and stop it from getting worse as time goes on.
Reports beyond the basic balance sheet, income statement. What other reports do you believe should be standard? Maybe they're not standard, but should be standard in a monthly financial packet.
There's another one, which would be like a reserve report that shows the money that you have saved up plus money that you're going to increase the amount of reserves that you have, minus any disbursements that you had that were reserve expenses for the period. So then you have a good handle on what's happening with that reserve money that you have saved up for capital improvement projects, or that goes in line with your reserve report.